Hey everyone, today we are talking about the most intriguing asset on the market, Chainlink. The main news that the many might have missed is that the parent company of the New York Stock Exchange, NYSE, has officially partnered with Chainlink to bring forex and precious metals data on the chain. This partnership could potentially change an entire game, but that's just the tip of the iceberg. In this video, we are going to break down why Link has lagged so much behind the market for the last 2 years, what other quiet partnership, including US government, has already been made, why a Chainlink ETF is almost inevitable and how it will affect the price. And most importantly, I share my analysis on potential price levels for the end of this year and next year. So let's get into it in order. Let's start with the main question. Why has Chainlink shown such a weak performance? The reason is simple. This bull cycle has primarily been driven by institutional and their ETFs, which prefer to invest in layer 1 blockchains like Bitcoin and Ethereum. DeFi and the Chainlink were left on the sidelines for a long time. This is especially clear when you look at the link to BTC chart. It has effectively been in prolonged bear market. But now the situation is starting to change, and the fundamental factors that we'll talk about next are pointing towards a potential reversal. So why the situation is changing? The main answer is 3 letters: RWA, or Real World Asset Tokenization. This is a new gigantic narrative where Chainlink is absolute leader, securing 61.8% of the total value locked in protocols that use oracles. The competition is far behind. A prime example is tokenized stocks. Practically all major platforms for issuing them, like X stocks from the company Bakkt, which are traded on the Kraken, Bybit and Solana, using Chainlink oracles to get accurate price data. This shows that the Chainlink has become industry standard for bringing real-world assets on chain. This dominance is confirmed by a high-profile partnership. We already mentioned the deal with the parent company of the New York Stock Exchange, ICE, but there is another equally important one. The US Department of Commerce has chosen Chainlink alongside with PIF to publish US GDP data on the blockchain. This has a huge recognition from the government body. Furthermore, we shouldn't forget about the payment sector. Chainlink has long been integrated with SWIFT as well as with MasterCard and Visa to provide secure cross-chain transfers using its CCIP technology. This makes the Chainlink a key piece of infrastructure connecting traditional finance with the world of blockchain. The fundamentals and partnership look very powerful, but what specific catalysts could push the price of Chainlink up in the near future? Let's highlight 2 main ones. The first and most important one catalyst is the potential launch of the spot Chainlink ETF. The investing firm Bitwise has already filed corresponding application with SEC. Considering the new, more friendly policy of the US regulator toward DeFi under Project Crypto, the chances of approval are very high. The launch of the ETF could open the door for a huge influx of capital from large investors, just as it did for Bitcoin. The second, no less important catalyst is the new Chainlink Reserve program. In simple terms, the project has started using its revenue to buy back Link tokens from the open market. In the last months alone, 5 million worth of tokens have been bought back this way. This creates a constant buying pressure and over time reduce the number of tokens in free circulation. So with the strong fundamentals and powerful catalyst, let's move on the most interesting part, price prediction. The short-term target for the end of this year is a return to the previous all-time high of around $52. This is a key psychological and technical level. Breaking it would mean a reversal of the multi-year bear trend against the Bitcoin and would confirm the asset's true strength. If Chainlink can break and hold above $52, it's opened the way to the next targets. The medium-term target for the end of this bull cycle, according to my analysis, is a range of $90 to $100. This forecast is based on the technical analysis of the Link BTC chart and reaching conservative Fibonacci levels, which often plays out in similar cycles. Of course, those are just predictions, and they are heavily dependent on the overall market condition and Bitcoin movement. But they clearly show the huge potential Chainlink could have if the current fundamental shift continued to develop. So let's summarize. Even though the Chainlink has been lagging in the market and was asleep for the long time, we are now seeing a massive shift. The project is not just staying afloat, it's becoming a real piece of infrastructure for the new trend of real-world assets, RWA tokenization, dominating the market with a share of over 60%. Perhaps with the giants like a parent company of the New York Stock Exchange and the US government are not just just empty announcement, but real recognition of the technology at the highest level. Add to that the potential launch of ETF and the token buyback program, and we get a recipe for potential explosive growth. Returning to the price prediction, the short-term goal is to break the all-time high of $52, which will be a key signal of the trend reversal. In the medium term, targets of $90 to $100 look quite achievable if the bull market continues. Of course, always do your own research and remember the risks, but in my opinion, now is one of the best times to take a fresh look at the Chainlink. Thanks for watching until the end. If this video was useful to you, I would greatly appreciate if you like and subscribe to the channel. Let me know in the comments if you believe in the growth of Link. See you in the next video.